Good afternoon, guys. We're about to take another session. So during this video, I'm going to give a quick recap on my New York session. Today is Tuesday. Yes, Tuesday. Today is the 20th of January. So, if I need liquidity has already been taken, liquidity was taken, so I dropped to the 1 minute to find my entries. Here's a quick checklist on how you can make the process easy for you. First things first, you check if the liquidity has been swapped on the entire time frame we are looking at, means the 5 minutes. So I checked, has any liquidity been swapped on the 5 minutes? Check. Now I'm going to I dropped down to 1 minute to wait for a change of character with displacement, and that displacement will signify there's enough momentum. So I need to see a change of character with a fair value gap showing that there's enough inefficiency to push the move in the direction down enough. Remember guys, risk management is very important. I normally risk 1% of my capital per trade, and I target 2 RO. So once we see our change of character, or have our fair value gap, all we need to do is to place our limit orders at the consequent encroachment of the fair value gap and put our stop loss on the recent low that was formed. I will wait for order to be filled. So while waiting for our order to be filled, if the trade setup reaches 2 IO without filling us in, we skip that trade. That means we have missed that trade already. And this trade, his trade was running with a lot of momentum. That was a missed trade. So I went back to my 5 minutes to look for another potential setup. Well, sometimes we miss trades. Sometimes we miss trades and sometimes we win others. It's good to miss the trade than to take a losing trade. In trading, patience is really key. Patience is very important. So I'm just waiting. So right now we wait for the 9:30 opening range to form, and then I'm going to scalp the 9:30 opening range, the up, ORB as many people call it. We're going to scalp the 9:30 range. I'm going to show you step-by-step processes on how I scalp, how I took the trades. Okay, right now, this was 9:30. So in order to trade a 9:30 opening range, or how I traded it, what I usually do is that I wait for the first 15-minute candle to form. That first 15-minute candle at 9:30, that's my opening range. That's what I'm going to use to trade. So right now, I was waiting for the candle to close so that I can mark out the high, the midpoint, and the low of the candle. There are many ways to trade the 9:30 opening with breakout. Some people use 15 minutes, some people use the 5 minute, some people use the 1 hour. Me, I prefer using the 15 minute because I take most of my entries on the 1 minute. So the time frame you choose also depends on the time frame that you execute your entries. If you're choosing a 1 hour time frame to select your opening range, then you can execute on the 15 minute. So as you can see, I've marked out the high, the low, and the midpoint of my New York opening range. The first 15-minute candle at 9:30 New York. Okay, now we drop down to the 1 minute to scalp it. It's a very straightforward way to scalp. Once the market is at the midpoint, I'm going to see the reaction of the market at the midpoint. If the market is rejecting at the midpoint, if it's using the midpoint either as a resistance level or as a support level. So I just need to see these things. If the market is using the midpoint as a resistance level, what I want to do is to take a shot to the bottom of the range, because the market usually either tests the top or the bottom, but that's what's called a range. So the market will either test the top or the bottom. So my goal is to either catch the trade as it's testing the top of the range or testing the bottom of the range. For this trade right now, the market was resisting the midpoint. The midpoint was acting as a point of resistance. So I waited for a candle close, a nice bearish engulfing candle close, and then I took this trade. I took a sell and I put my stop loss just at a little bit above the high of a candle that formed the engulfing candle to the downside. And I'm just going to target the bottom of the range. Can I target the bottom of the range? We just target the 2 arrow. Very conservative. And while trading like this, always remember, once the market reaches your 1 arrow, don't forget to break even while scalping. Once the market reaches your 1 arrow, set your break even and you write the rest to the TP. Okay. This resistance, markets really accumulate at the midpoint. When you see market accumulate at the midpoint like this, that means the range, these are buyers and sellers trying to figure out which direction you want to go. So at this point, the buyers are almost as strong as the sellers. That's why it's ranging. It's like people are putting in 10 lots to buy, where people are putting 9 lots to sell. The buyers are almost equivalent. That's why you see them ranging at the midpoint of the range. So they have to decide either they're going up or they're going down. If the market tests the bottom of the range and the buyers decide the market is too cheap at the bottom of the range, they're going to buy it back to the top. And vice versa, the market goes to test the top of the range and the sellers say no, it's too expensive, they'll push it back down to the bottom of the range. But the battle is really decided at the midpoint of the range. Okay, this trade hit our stop loss, no problem. No, in this is trading, sometimes you lose some, sometimes you win some. Our first trade was a loss, but there's no problem. The first one was a loss, we're looking for another opportunity. That midpoint, we're using the midpoint as a reference. Why do they decide when the market comes back to the midpoint? Will they decide to test the bottom of the range, or will they decide to test the top of the range? So I just by waiting to see how the market reacts at the midpoint. Right now it's just a game of patience. So Always remember to use a very good risk management strategy, because trading is all about being able to trade the next day. You're trading tomorrow, you have to ensure that you can trade after tomorrow, you can trade next week, you can trade next month. It serves you no good to be able to trade today and be profitable while you cannot trade tomorrow, you cannot trade after that. You need to have a very good risk management strategy. You have to be able to manage the risk very well so that you can be in the game for long. It's not good to gamble your profit. Have a fixed ratio that you're using and grow your account gradually. Say no to FOMO. Always remember, do not FOMO. If you miss the trade, you have missed the trade. Let it go and wait for another opportunity. The market is full of opportunities. There will always be trades. There will always be setups. So you have to be patient. So I took a trade at that fair value gap. At the fair value gap that was above a midpoint, to see if I'll have a little bit of momentum to go to the top. Remember, I use that midpoint just as a reference line to see what the market decides. Because the market accumulates at the midpoint, it might test the top of the range or it might test the bottom of the range. The trade was filled in, so we have to see now. You need to be patient. It's a very easy concept. When the market has formed its range, the market either tests the top of the range and move, or it tests the bottom of the range and move. So using that as a reference, the market will either go to the top of the range or the bottom of the range. The second setup was also a losing setup. So we need to look for another opportunity. In a day, maximum, if I take 3 losing setups, then I'm done for the day. As you can see, the market came back to the midpoint and gave us a nice bearish candle. So that was indicating that there might be enough momentum for the market to test the bottom of the range. See, the market tried to test the top of the range, and there were not enough buyers to push it to take the top of the range. So it's a high probability that the market might test the bottom of the range before going back up. The market can come down, press the bottom of the range, and break. I've just decided to go. They can break the bottom of the range and they say that no, that price is still too expensive, they'll sell it or more. They can come to the bottom of the range and say no, the price is too cheap, and buy it. So we just need to look for our 2 arrow. Oh, see, are you seeing? There was enough momentum to the downside because the market tried to take top of the range and failed. So suffice to say, they will try to test the bottom. That means the sellers were more active than buyers in that particular point in the market, and that was it. Straight smash of the TP. So right now, you can either wait to see what the market will do now, because the market has taken the bottom of the range. Now you have to wait for the reaction. They use the bottom of the range as another reference point, the same way you used the midpoint of the range. How will the market decide here? Will decide that this price is too cheap, or will decide that this price is too expensive? So you treat the bottom of that range like another reference point, and you trade it. It's as simple as that, or at least as simple as that for me. So you just treat the bottom of the range, the midpoint of the range, and the top of the range as reference points. Will they act as a support, or will they act as a resistance? That's it. So if they're going to act as a resistance, you treat the point as a resistance. If it's going to act as a support, you treat that point as a support, and you remember to be conservative. Be conservative with your capital. I mostly use 1% of my capital to trade, max. I was settled that I'm not really sure of. I use 0.25% to 0.5%. And this was the last trade of the day. We had 2 for this opening range. We had 2 losing trades and 1 winning trade. So we broke even for this session. This was ended on the break even. And we're done. Thanks for watching. Please don't forget to like, to share, and to subscribe.